This video is simply to give you a quick overview of my indicators and how you might interpret them. Okay, here we go. With trading, always the biggest problem you've got is to know which direction to trade and how to make money. It's pretty obvious, but there you have it. This chart, which is the pound dollar 30-minute chart, so you can see here it says 30-minute chart, was traveling overnight. This is midnight our time, UK time, GMT. And you can see that these support and resistance Darvas lines, these are my own indicators on here, they're called the Darvas support and resistance lines. What we've got is a resistance at this level here caused by that. So the resistance is there, drops down a bit, drops down a bit, and drops down a bit. Okay, so we're going down. So that's the first thought we've got in our minds. Then the second thought we've got in our minds, we've got a low here, a low, we're going up. We've broken that uptrend and we're pulling back. Now sometimes with a pullback, what you're interested in is the pullback, so then you can go long. So let's look at this a bit more. It pulled back down to there and then it came back up to here. So we can see this is a potential long move. We've now got a higher low than this one. And the Darvas lines are getting squeezed into here with a potential higher low. But we still have a lower high at this point. What else can we see on here? We can see that if we come down to this level here, this is the bull bear butterfly area, and this code here that allows us to see what values we've got. Now, roughly at this level here, we've got a value of 8.36 or so on the bull bear butterfly on this candle there. We can see we've pulled down below the green line into this what I call the butterfly zone, and we're beginning to pull back out of the butterfly zone, as you can see here, beginning to lift up. So that's a good sign. We're looking for a bull trade according to the bull bear butterfly, and we're pulling back out of the butterfly zone. Now we look at this litmus test, which is the next indicator down here. That's been down and it's pulling back up again. It hasn't gone fully bull until it does this point here, but here it's saying that we are in a partial trend upwards. So that's a good sign as well. Now I come down to this indicator, which is the MTrader 3 indicator, and we can see that that's just ticked up from below. It's come up, it's saying we're bull. And we can see the next one below it, which is the MTrader indicator, is ticked up saying we're bull. And the one below that, which is the STrader indicator, is ticked up and says we're bull. So basically we've got everything saying we're going long at this point. And this is 7:30 candle, so that means at 8 o'clock in the morning is when we're talking about. That's exactly the time the volatility starts to increase. These are the volatility bars along the bottom. And you can see overnight they were down and then they began to pick up, and the next candle was a big push. Now if you're trading that, you would not have got that big candle until after this, of course. So you'd only see the right hand edge effectively. So let me show you what you'd see if you were trading that. Let me just move this across a bit here. Can we slide that along? I can see if I can get it. There you are. So what you would have seen on this screen at this time would have been this structure, this formation. So we've got more or less a sideways consolidation, up, a sideways consolidation, down, a sideways consolidation. This sideways consolidation happened after the overnight period, because that's the midnight from GMT point of view. And the bull bear butterfly has gone up above the green line, which is saying we're looking for long trades. We got the pullback with the potential move to the upside again. Why would we think that? Well, this consolidation zone is higher than this consolidation zone, and all the indicators are now saying we're good to go. So let's have a look and see what that is actually like on the alerts. Let's bring these alerts across. These alerts are the alerts that came from the pound dollar, as you can see here on the 30-minute. And for this account size is about, I can't remember, it's about 7,500 or something like that. it's saying that if you're going to risk 0.9%, and I'll show you the details of how I work that out in a minute, but basically let's see if we can get some understanding of that. The pound dollar 30-minute M trader and M trader 3, two of those kicked off at the same time, saying buy 0.68, so that's 6 minis, nearly 7 minis. It says enter at 1.2513. So what does that mean? 1.2513 is there. So that closed at this point here. It says if it breaks above this level here, get in on the trade going long with 0.68, that's 6 minis or 7 minis, at 1.2513. Put the stop at 1.2503. So 1.2503 is there. Okay, so that on this particular asset is a 10 pip stop. That's all we're talking about. 10 pips is the risk. And it's saying that we're targeting T1, T2, T3, T4, T5. All of those are the targets at different levels. I suggest you always target something like T3 or T4 because that will give you a reasonable risk-reward ratio. It's telling us the spread at this time was 1 pip, and it says the trading range at this time was 9 pips. So that's a very good inherent reward to risk ratio, and this is this value here. It says it's 9. Basically anything over 3.5 to 4 is pretty good. When you get up into the 9s and beyonds, you're doing very well. The reward at target 2 is 0.8. That just creeps into the bounds of being acceptable. And then the litmus test is +1, that is a partial trend, and the bull bear butterfly is 8.13. So that's not into a fully bull mode, but it's at the top end of the butterfly zone. So all's looking pretty good there. If you take that trade there, at that exact point there, with the stop here, let me just mark those on, see if I can do that. Put the stop on at somewhere around there. Let's put that, correct it, 2503. There, that's the stop. And our entry was here at 1.2513, didn't we have? That's right, there you are, 1.2513. So that's our entry price. And our target for T3 or T4 is 1.2528. So let's put the T4 on. 1.2528 is around there. So there we have it, exactly correct. So that would be our target at T4, and may be able to get T5. Well, we know with looking back at it that actually that's what we've achieved. However, let's just scroll sideways on here and see. We blew straight through that, absolutely creamed it right the way up through there. The total number of pips we made on that move was potentially 49.50 pips with 6 minis. So that's works out at $6 or £6 a pip. 50 points, $300, £300, something like that, out of that trade. If you targeted it just there, well, then you would have got a total of 15 pips, so 15 times 6, which works out at around 90. So still not bad for not very much time. The way I tend to trade these is to get the stop in, and when the price has moved up, move the stop to break even, potentially trail the stop. Quite often I trail the stop, and the trail on the stop would be roughly the same as the TR. TR is 9, so a 9 pip trail behind that, and that would have actually taken it right the way up from this level here all the way up to there, which would be 59 pips. Then it would have retraced it back down to there somewhere, and allowing for the bid spread, bid offer spread, and made you about 48 pips or something like that. So that's basically what I would have been trading this particular asset, pound dollar. Let me just show you the indicators then. I'll bring them up. I'll pick up they're all based on the same idea. So let's go and have a look at the M Trader, because the M Trader is the one that kicked off. Bring that in over here so you can see it. M Trader, on this particular occasion, I've got it set up to give me alerts. That's true, give me alerts. Do I want to see any failed alerts? No, I don't want to see them. That's just noise and I'll ignore that. Do I want the candle to be a high probability candle? I'm saying at the moment I don't mind, so that's false. But I could say I do mind, in which case that would be true. Do I want reward probability to be strong? And I've said I don't mind. I want to actually look at the alerts and make my own decisions. My risk percent is 0.9%. Now that's a whole complete conversation about risk management, and as you know, my particular preference is to risk only 0.9%, because that puts the maths in my favour. That's a completely other story, and I'll tell you about that another time if you like. On this settings I've got the bull bear butterfly minimum of 0. That's basically above the 0 line. That's anything that is at all bullish I want to know about. And the litmus min, I'm saying I want it on counter trend. I could change that to be partial trend, which is actually what this alert was, a partial trend alert. But for this moment I'm just saying I want to see everything. And then if I wanted to, I can push the alerts out to my mobile, and I can also push it out as an email, and I can prefix the email comment with 30mt space hyphen. That means I can filter it out of my emails much easier. So that's really how you set it all up. And all of these indicators, the lower three, the M Traders and the S Trader indicators, can be adjusted to give you the alerts that only you are interested in. This makes it very powerful and very flexible to set it up exactly for the trades that you want to take. So yes, there we have it. And that trade would have given you a very, very good return. That was the pound dollar today. So the next question might be, what other trades could we have taken today? So I just picked up a chart of the pound yen, and here's the pound yen chart, and you can see again, if we look at this particular candle here, that is the 730 candle again. Let me just move this out of the way so we can see it properly. There we have it. So no, that's the 7 o'clock candle this morning. That means the 7:30 trade alert. And here again, if you look at the structure of it all, we can see on this particular candle the bull bear butterfly was above the green line. So we've been going sideways, but this is telling us that we're above it and we're looking for long trades very clearly. The Darvas support and resistance, we've got here, we've got a low, a higher low, a lower low, then a higher low, higher low, higher low. Definitely moving upwards. The resistance line is getting pushed, so that's definitely strong. Everything's in our favor. We get the alerts down here. Let me put that across there. You can see the alerts. The bull bear butterfly is above the green line. The litmus test is right, completely bull. The M Trader 3 is completely bull. The M Trader is completely bull. The S Trader is just giving us another long trade alert here, which would have given us the entry. There's our particular entry of that. Again, we would have got something like 60 pips potentially out of it, with a trailing stop of about 10 pips, 12 pips maybe max. Trading range, if I pull this down here, the trading range is this particular thing here. They say the trading range is 14. So the stop would be a maximum of 14 on this. Personally, I would trade it with a tighter stop than the trading range on this, so that would make it maybe 10 or 11 or something like that. Enter on that candle, 11 pip stop, that would have been fine, wouldn't have got hit. 73 pip target, profit up there. Trailing stop 76, coming back down there, so 60 something or other. You could have made 60 pips, something like that. So that's another example trade based on my Cato algorithms and indicators. So there you go, that's it, that's the thing. Now the question is, what questions have you got? Yeah, what questions have you got?